Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, October 22nd. It's 6:17 as I'm starting the video. Taking a quick look at futures. Equities mostly flat. Bitcoin's up 1%. Oil's up 0.5%. Gold's up 0.75%. Copper, which got trashed yesterday, is bouncing back a little bit. It's up 1%. Nat gas is up about 1% as well. Not much happening on the macro front this morning. We've got a flash PMI coming out about I think it's 9 o'clock. So that'll be relatively interesting, but not a lot there. On the earnings front, we've got a pretty nice mix. We've got Cleveland Cliffs in steel, Amex in financials, Schlumberger oil services, Honeywell, diversified industrials. We've got HCA in healthcare, and we've got Regions Bank. So that's a quite a nice little mix to wrap up the week in a lot of different sectors. Good names that we can possibly get a read through, and of course, all hell broke loose last night when Snap reported. I guess the new privacy rules implemented by Apple are really starting to dig in on some of the ad revenue, and Snap missed all their numbers, but then that cascaded through to Facebook and Google as everybody's kind of panicking about these ad rates that they're going to get. So we're going to have to see how that pans out, but it may offer some nice trading ops. You know, when you get a 15 or 20% drop in a name, and traders conclude either it's not enough or, hey, that's an overreaction, you can get a real nice, either bounce or follow through. But at the very least, a name like Snap and, Facebook is down quite a bit as well. Google's down quite a bit as well. It's kind of hard to get a read on Amazon. But the point being, our bracket trade setup, even if you're not a guy that likes to jump in the day of, like today on Monday, those are all going to set up nicely as bracket trades where you can basically take today's range and then create a bracket around it. And then if it moves above today's trading range, then you can take it long into the gap. Or if it breaks lower, you can take it lower, and then you have a really nice stop. So on days like today, there a lot of nice opportunities are created. So let's start with the 10-year, and I think something is going on here. I haven't figured out what it is, but let's just talk about it. We had another jump yesterday, and the 10-year yield, we're now up around, let's just call it 1.68%. And we've seen, this dramatic rise. We didn't spend long here between 1.4 and 1.5. We spent about a month in this range between 1.5 and 1.625. And so now we've broken above. This is inflation fears, etc., that rates have just been too low, and now the market is starting to price in higher yields. And of course, when your yields go higher, your TLT goes lower. And we've been talking about this every day. The breakdown, the back test, and now we're looking at the third leg, which I assume, or just on a measured move basis, is going to come down in here to the high 130s, like 137, something like that. That seems like the next time I show this to you. I'll put the measured move on there and see where that exactly comes to. But I can just kind of eyeball it, and it looks like it's going to be down here in the 137 area. So bonds look to be heading lower. And of course, when you got bonds heading lower, bond proxies like your consumer staples will have a hard time as well, because a lot of people use those all-American staple companies, the Procter and Gamble's, and those high-yielding kind of stable names for bond proxies. Those tend to have trouble in a rising rate environment. So moving on to the VIX, you can see that they've really slammed the VIX down here right at 15. And I was going back, that's like a 4-month low. Have to go back to July to find a lower VIX. So now what you need to do is kind of alarm this 15.75 area for, a potential move back above. And so now that we're, down at the ultra bottom of the range, it's just a matter of time how long we can stay down here and have a positive equity environment versus reversing and then having a rising VIX. So even if you don't trade it or tend to watch it all the time, you can go to a VIX chart and set yourself an alarm, or set yourself a mental note just to watch periodically and just kind of see what the trend is. And so certainly something to keep an eye on. During all this time, the NIMO has been relatively well behaved. I mean, we are up here towards the upper part of the range, but not at a point where I would, send out warning flares or red flags. I think we're okay. We need to be cognizant of the fact that we could possibly go into overbought mode and probably want to shed some of those longs, but I don't think we're there yet. And actually the NAMO, the NASDAQ oscillator, is even at a lower level because it's been kind of lagging the NYSE in terms of performance. So just let's just go through these our regular charts that we go through every day, looking at the indexes. I mean, we're grinding higher. We've had a relatively quick and steep move up. We spent a day consolidating here in this little flag formation, and then we had a strong final bar that pushed price up to this 453.5, and we're in blue sky country, so there are no natural sellers up here, no real overhead resistance. So I think that bodes well. So we're just going to have to see how far we can push it. And what I like to do when you're in blue sky country is keep a close eye on your momentum and RSI indicators. Here you can see that we had the bull cross at the reset line, and that's just a reconfirmation of what we know. When you have a momentum reset at the 0 line and then you get that bull cross, that's very often a very, very bullish setup. And then we got the big push, and now whenever you get towards the top, your momentum is going to start to wane, and then you'll get the potential for a high level PPO bear cross where the momentum starts to come out. And you can see here RSI is overbought. That's not a reason to sell, but it is a reason to watch. That if you get a bear cross in momentum and then you have RSI drop down below 70, then that's kind of an early warning sign that you're probably going to see price have some type of a corrective corrective period. And so on here, on our price levels, I think you've got a good base down here at 451. So I think from that perspective, if this came back to 451 and spent some time in here correcting in time rather than in price, I think that's totally fine. I think if price dropped down below 451, you'd probably see a further pullback into 449.50, possibly even back to this gap and 447.50. But we'll just take that, kind of as it comes. And here you've got the 30-minute charts, just giving you a little extra resolution on those levels. And see, of course, on the lower time frame, you're going to see RSI and PPO act differently. So here, you've seen momentum come out as price corrected in time, and what you want to see or watch for is that bull cross after some momentum has come out, and then you can get the power to have an up cycle. And you can see here that although RSI dropped out from below 70, never dropped below 50, you never really got a price move. So that correction has happened in time, not in price. And that's what you want to see, because now RSI can break back above 70. You can get a PPO curling up, get a bull cross here, and then price will typically respond by going higher. So if you had been long in this area, now you can move up your stops and your strikes to 453. I mean, if you're actively trading it, and then that can be a great line for you to shoot against today. And then you can set your stop just right below that. Qs. Now, this potentially might be a little bit different on the open, given all the turbulence yesterday. After hours, we've got a lot of big components. You've got Intel, you've got Facebook, you've got Google, all kind of being down. We'll have to see how that affects the Qs on the open and, subsequent trading. But as we closed last night, we had a nice closing bar. And so now we've moved away from this 374 pivot. Now we've moved up a level to 376. You can see that we've had a little corrective little flag in here. And so now I think you can use 376 as your pivot and look for 378 and a potential breakout there. And what's important about that level is if you look back, that range between 378 and 381, 381.50 was a range where price spent a lot of time. So remember, when you leave a range and then you come back, then your target is the opposite side of the box. So your target, once you re-enter the range, will be back up here towards 381.5, 382. There may be some resistance, in between at 380, but at least from a targeting perspective, you'll know that your target would be then at the top of the box and the prior highs. And then this is just some detail on the 30-minute chart with this 376 and then moving up towards 378 and back towards the highs. IWM has been. I have thought that IWM would be doing a lot better than it is. I thought the rising rate environment would really be like rocket fuel to the small caps. I mean, we've got a little bit. I mean, it's in an uptrend. That's fine. That's all well and good, but it's not racing ahead like I anticipated. Maybe that is still to come. I don't really have any kind of a thesis that would work against it. So I mean, we'll just have to see how it goes. But trading day to day, you've got a pivot point here at 228 with a target of 229, and then once you get above 229, this prior high, then it opens up towards 232. So that would be a nice level to take out, this 229 level, and then that would open up a higher range on IWM, and you can just see that level here at 228, and then 229 goes back to that prior high, and you can see I've dropped in a little channel here, but really the top of the range is like 232, 234, and that would be the top of the giant range on the daily chart. Breaking through 234 would be monumental, because that's like a $25 trading range. So that would open up into the 250s as far as a measured move target. So that would be a pretty big deal if IWM were to be able to break out of that daily range on the daily chart above 234. All right, Facebook. This took a big drop on that Snap news, and what I've done is just I looked pre-market. It's trading down here around 328, 330, something like this. So that this is all going to be, hypothetical, but you'll have a big gap above the open, and you've got a gap below the open as well. And probably what's happening right now, price has just stopped on the top of this gap as support, and then once price opens in the regular session, traders will decide, do we need to crater this thing and come back and test this low, or was that an overkill, and maybe get a down move towards this level here at 323, and then take it back up through all the, through that big gap. And that's the thing I want to emphasize to you, is that when you've got those big gaps there, price can move pretty quickly if people get it in their head that, this was all an overreaction, that that they want to jump in. They can run it up pretty quick. And what I'd like you to do, and I haven't done this yet, is check. I think Facebook's earnings may be Monday after the bell, so that may be, another consideration for you. If you were, say you saw price running today, you could get that long position and then carry it over the weekend and hope for a run up to the print, but then get out before earnings. So you would be able to, bank whatever gains you had, because who knows what might happen on their report. Totally different scale company than Snap. But, if Apple's privacy rules are digging into revenues on ads, it may affect them as well. So here's Apple. Nice technical structure. I mean, you got a quick run up, and now you've got a flag, and so the price is kind of digesting this big move as you'd expect and as you'd want. So now, if if you didn't participate in this, now you've got, as price takes a breather and you want to participate, you've got very clear levels here where you can target an entry either on a pullback to 148.50, or if price breaks out above 149.50 or even 150, then you can get long and look for a next leg higher. And if you think about it or measure it out, if you think about this as your impulsive flagpole higher, and then this is your flag, then your measured move takes you back up to the old highs, and that would be a nice move to capture and see where it goes from there. But I mean, just from a measured move basis, you can see that this is about halfway between the lows and the prior highs. So you would expect that if price broke out, that you could run up to the highs. Tesla is doing a thing of its own. Here I put in just that same flag structure. You had an impulsive move out of earnings. Once that impulsive move was made, spent the rest of the day consolidating in that flag. And now you've got the measured move target up here towards 950. So anyways, you got some a real nice level here right at 900 that you can buy a breakout from there, and then your target would be $40 to $50 higher on Tesla. Really strong chart. Speaking of strong charts, Microsoft is doing great. We had the breakout above 305 the other day, and price made that impulsive move, spent some time consolidating, and now has broken out again above 309. So if you're in the name, I think you can move up your stops towards 309 and just stay long. I think there's no reason to think it isn't going higher. Again, check your earnings. They all start reporting next week, but I'm not sure what the exact timing is. And then you'll have to decide, if you want to hold through earnings or exit your position before they report. Amazon, I had a hard time getting a read on where it was pre-market. So there was a lot of, whipsaw action. So I'm not sure really exactly where it's going to open. So I'm not going to spend a lot of time on it. But just generally speaking, if it's down a lot, you'll have a big gap above, and then you'll have, wherever it opens, and then you can kind of, if you're interested, play that opening range, just like we talked about on Facebook, that the market will decide either, hey, this is way overdone and run it back up, or say, no, it's got to go lower. So you can play that first 15 or 30 minute range just like you would a bracket trade. Let the thing settle out for 15 or 30 minutes. Set yourself up a range, and then you can play either a breakout or a breakdown from that range in your active trading. Google, same idea. I looked pre-market was down here around 27.85 where it actually opens. Who knows? But there'll be that big gap above. And in this case, there's a sizable gap below. So please be aware of that in your trading as well. That, you know, if they bring it down and take it below 27.75, then you got a $25 gap there that's left to fill. Netflix did its moonshot. Now it's forming this flag. I think you can buy it on a breakout above 650, 250, and looks like it's going to 675 just on a measured move basis. So that is really rocking. Now semiconductors probably is not going to look like this. As I told you yesterday on my note, I was going to try and get long. I mean, it looked good, heading into the close, but then Intel blew up, and that's a big component in SMH, so I expect this to be down this morning. We'll just have to see kind of how it reacts and what it does. But so that kind of blew up that trade. So I'll have to decide whether to just abandon it or if it looks like it's going to do all right in the end. So just honor your stop wherever you put it, and we'll see what happens there. What I wanted to talk to you guys about is that big disconnect with rates. Typically, when you've got a rising rate environment, as we've been discussing, that's like kryptonite to the bubble stocks, the high valuation stocks, that kind of thing. And we just have not seen that at all. You've got, this is ARK FinTech. I mean, just going up, not even batting an eye at the rising rate environment. And you can look at, ARK Invest, ARKK is like a special case because it's got Tesla as such a very large component. And, if Tesla's going up, to 900 or 1,000, ARKK is not going to go down no matter what interest rates are doing. But, if you look around the map, whether it's, ARK Genomic or ARK Autonomous, they all those charts are, they're not setting the world on fire, but they're not going down either. And I would have really expected in this rising rate environment that, the DocuSigns, the Zooms, the Pelotons, these real high flyer type names would really be under some pressure. And we just haven't seen it. I'm going to continue to watch for it, and I think you should too. But I haven't really come up with a narrative that would explain it. Not that I need a reason. I'm going to follow the charts, and if you're in those charts and you're long and they're going up, good for you. Just watch it close, trail your stops, and maybe it's different this time. Maybe rates can go up and these stocks can continue to go up as well. So I wanted to show you UPS. This is a bracket trade that has been on the board for a while. I know several guys in the trading room are in it. I wanted to pass it along to you guys in case you had either forgotten about it or didn't have it alarmed. We had a gap down way back when in early August. Spent some time within this bracket, and then it finally broke down into this gap. Now, we didn't get a complete gap fill, but that was a pretty good move there of $10 from 187.50 down to 177.50. It has made a reversal. And then just from a technical standpoint, remember, trading range, you drop out, you come back to the trading range, and you come in. Your technical target is the far side of the range. So your technical target was back up here at the bottom of the gap, and that happened pretty quickly, and now we're in the gap. So if you were interested in UPS, kind of watch it closely. I mean, if it opens up $3 this morning, I think you could say you missed the trade. But if it comes back to 197.50, I think you can hit it there, and then you've got a nice entry at the bottom of the gap, and your target then would be up towards 209, 210, and then that would be a nice trade for you. So let's wrap it up there. If you're new to the channel, thank you so much for spending some time. I hope the levels in the discussion help you in your trading. Hit the subscribing and the alarm bell. That way you'll get the YouTube content. And if you like, jump over in the show notes. There's a link there to register for all my content with your email. It takes 5 seconds. And then you'll officially be part of the team, and you'll get everything that I publish right in your email box. That would be great to have you. And then you'll also get an invite to our trading room, where we've got usually have a lively discussion every day with a lot of ideas. Be great to have you join whenever you're able. And the rest of you, thank you so much for supporting the channel. I really appreciate it. I hope your trading's been going well. Let's see if we can have a good, strong wrap up to this week. Let's see what happens with Facebook and Snap and Google and all those names today. And then we can look forward to next week when all the mega cap tech starts to report. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.